The Fibonacci spiral is easily one of the most interesting and dynamic charting tools that is based on the Fibonacci sequence, because it identifies areas of interest in terms of both price and time ranges. It can be applied in so many different ways and be affected by various factors that aren't normally considered even with other tools based on the Fibonacci sequence. That's why it is often difficult to understand and practice using this Fibonacci method effectively. The best way to overcome this problem is to examine lots of Fib spiral examples that cover its application before, during, and after important events happen on the chart, along with cases of how it can be effective and less effective, based on its advantages and the limitations. The following lessons will have exactly this kind of coverage on a wide range of charts from various markets around the world and different time periods, such as stock charts, indices, currencies, and commodity futures. So this educational content will not be based on one particular asset or time period. Instead, this material can be generally applicable to whichever charts you choose, no matter when you watch this. To better understand the Fibonacci spiral, it's first helpful to remember time is displayed on the chart as moving horizontally from left to right. But when marking time ranges, it's common to use the vertical lines to define a time period, in order to refer to specific points in time on the horizontal x-axis. Price, on the other hand, is displayed on the y-axis, and of course it can move both up and down. Usually horizontal lines are used to refer to price in order to define ranges and mark specific prices on the y-axis. So it's quite normal to be familiar with these directions going up, down, right, and left. But since the Fib spiral is related to both price and time, there is additional consideration to take note of other factors that relate to diagonal movement, and of course curvatures. The Fib spiral begins at the center with the starting point. A major factor on the overall size of the spiral is the end point, which is the second point of the spiral the first starting point extends straight to. This forms a straight line which extends out indefinitely. It can be referred to as the Fib spiral's pointer. Eventually, this pointer intersects with the spiral. These markings can be useful when referring to how the spiral is oriented, basically referring to the orientation of the spiral by the direction the pointer is facing. Like a compass, it can be facing up, pointing north. Keeping with the analogy, going to the right is like pointing east. Pointing down is like facing south. A spiral's orientation defined by the pointer going to the left is similar to referring to a western direction, and there could be orientations in all the positions in between, similar to how there can be northwest, northeast, southwest, and southeast directions. Since future movement on the chart will take place towards the right side, and price or whatever units the chart is in can go up and down, the main goal is to orient the spiral in such a way in order to arc and curve towards the right side, along with being an appropriate size based on the distance between the start and end point. Sounds simple enough, but the factors that go into deciding how a spiral is oriented depend heavily on the specific context of the chart. Often there's not just one single correct way. Usually there are multiple ways and options to apply the spiral, and it's not uncommon to see several variations of spiral orientations that identify similar areas of interest. Looking at lots of situations in the following examples will help you practice and become more familiar with the thought process in deciding how to orient a Fib spiral. The most important settings related to using the Fib spiral are related to chart scaling. It's common for charts to be set to auto scale, which is normally no problem. But for Fib spirals, it shouldn't be used because it can affect things like the proportions, size, and positioning of a Fib spiral, especially when changing the magnification of the chart. Pay attention to how the spiral can change in position, proportion, and size when zooming in and out. Some of these changes can be quite drastic and lead to ineffective or even useless results. Sometimes just moving the chart around without changing magnification can alter a spiral. One option is to find a desired spot for the spiral and apply it, then turn off scaling of any kind. And the chart can be moved around with essentially no alteration to a spiral. But then there's still the issue of magnification. Zooming in and out can still affect a Fib spiral. One of the better options to resolve this issue is to lock scale. Doing this can allow for a movement on the chart and changing of magnification for zooming in and out. Then basically a Fib spiral won't be altered with those problematic issues. One of the only drawbacks of doing this is when a chart is zoomed out significantly, it can appear distorted. Like here, the movement looks a lot flatter than it actually is. Once the spiral has identified or confirmed some areas of interest, you could mark those areas, then change back to auto scale. Going back to auto scale would also likely distort and alter the Fib spiral with those issues we discussed before. So you might want to delete the spiral after the areas of interest have been marked in order to have a less cluttered chart when returning back to auto scale. Fib spirals can be applied at some of the earliest signs of a potential reversal. In this case, one can be applied at the low and high price of a bearish candle, which has traded at the highest price so far in this current uptrend. Then, as price accelerates lower, there's further validation of the spiral's position, but since price is on a near vertical drop, the outer portions of the spiral will likely not contact price anytime soon. So we can flip it down for another spiral orientation to get shorter-term coverage of the spiral to the right side. As the reversal progresses, the spiral naturally arcs down sharply. Then the area of interest is where price contacts the spiral. That means in this bearish context of falling price, the 20 boundary at the beginning of 2022 is a price range, and a time range where there could likely be more potential for opposition to falling price. This did turn out to be the case for a short time, but it doesn't necessarily mean contact with a spiral would be a guarantee of support for a rebound. Rather, it's more of an identification or confirmation of where there can be more contention against the trend. When a fib spiral is applied to the low-end high price of one of the most bullish candles in this area of congestion, it also marks the start of the next area where there could be potentially more support against the downtrend. Though as price continues to fall further after another brief period of congestion, it's helpful to flip the spiral for more coverage to the right side. However, this obviously produces poor results because although the spiral is based on a bullish candle, it wasn't at an area of a clear price reversal. Not even a gradual or sharp swing point, unlike the candle the first spiral was based on, within the context of a clear swing point. When fib spirals are based on the high and low prices of single candles, it's normally preferable to have them in the context of a sharper swing point, or generally a more defined reversal context. The candle this spiral is based on is similar to the context of that area of congestion. Price was mostly neutral to slightly bullish. However, it's the lowest point in this potential double bottom, which is quickly failing to produce a bullish reversal and likely to become a continuation range. Nonetheless, it can still be useful in the continuing bearish context since it contacted price at another area of interest. Still in a bearish context, when price contacted the spiral, there was certainly opposition and contention to the downtrend in July. And here there is more progress with a pronounced steeper upswing just after price passed the spiral. It's not absolutely necessary, but it's always preferable to see the spiral contact previous swing points near some of its earliest stages near the center of the spiral. Then finally, here are some almost ideal conditions for a fib spiral to be applied to a single candle. It's a clear reversal point, in this case an upswing, and the candle is also in a bullish reversal context. The spiral contacts a previous reversal area, in this case the downswing from June, and that 14 area from the downswing in June is a natural choice for marking a place of resistance in the near future. Then as price climbs higher and the spiral arcs over to the right side, we get an approximate idea that near the beginning of August, a major event is possible at this area of interest. Indeed, this green surge quickly goes past the natural area of resistance around 14. With a bullish breakout making good progress, we can flip the spiral to face down for more coverage to arc up and to the right side. Except this doesn't go far enough. Going to the next clear upswing point in the reversal range, which is actually better since it's the lowest point, we still get similar results with the 14 area around August when pointing the spiral upwards. However, we still need more coverage up and to the right side. Though pointing the spiral down and using different candles still doesn't produce good results, even with these more recent minor swing points just before the breakout began. An alternative for more coverage to the right side and upwards that doesn't extend too far or too short involves basing a new fib spiral on the swing high and swing low of the final portion of the downtrend. As price continues to rise, this is quite useful. The spiral arcs up and to the right side. At the same time, it's a good size, not extending too far or being too small. Using another fib spiral close by and in the context of the new uptrend can help narrow down an area of interest in both price and time. It's not completely necessary, but it's usually the case that the spirals can point to the same direction. In this case, to the right and down. Both pointers are facing to the southeast if it was a compass direction. So when the spirals arc back down to meet rising price, it's a context to approximately identify an area of resistance in both price and time for the ongoing uptrend. At this stage up here, there's a clear peak even sharper than the very first downswing that began this case study. The spiral is pointing up so that it can arc down to match falling price. Given the clear candle to base the spiral on in a suitable context, it's not too surprising to see these good results. A reversal range against the downtrend begins almost exactly where the spiral begins to contact falling price. If we use the same high and low prices of that peak candle but pointed down even before September began, it would become quite obvious this would be an incorrect choice, since the spiral wouldn't even arc back down to a company falling price, let alone make contact with it. This will be a demonstration of how fib spirals can be applied to reversal areas without using the high and low prices of single candles. Instead, it's possible to use one high and one low price from the reversal point, so that it's still in a vertical position, but the end point extends much further than a single candle. In fact, you could use two spirals, and usually they would be close enough to overlap and point in opposite directions. Then you could do something similar on a horizontal plane to form a rectangle. With these spirals in horizontal positions, it's also preferable they'd be close enough to overlap, and they point in opposite directions to each other. Areas of overlap in the rectangle can mark approximate price ranges of interest. Most noticeable here are what turned out to be the boundaries of a gap down. And although the upswing didn't reach the 420 area, or make direct contact with the spiral which was arcing down during the downswing, it was quite close. And in reality, not all areas marked by the fib spirals will be directly contacted. Given the context of the established uptrend weakening and the significance of the area under 400, combined with the spiral arcing down during progressively stronger downswings, these spirals were still useful in identifying an area of price and time of interest. In this context, opposition to the upswing. Although information from these spirals could still be useful into October, it would be beneficial to use more recent context after the clear uptrend began to weaken. In other words, once more neutral to bearish context appeared with this range of sharper downswings, it would be time to base new spirals on these developments. With reversal points, even if they're in a near horizontal range, it's similar to single candles in that spiral positions will be based on the highest and lowest prices of reversal points in the area. Since price is progressively dropping in this bearish context, it's preferable to have a short to medium term coverage of this by spirals to the right side and facing down. Forming a rectangle with the two other spirals in horizontal positions isn't that useful in this case, since price isn't likely to swing back up towards that 370 area where there's convergence within the rectangle of the spirals, meaning there's greater potential for neutral to bullish movement. Similar to the last example where there are two or more spirals, it's usually normal to see a pair of spirals rotate on the same general path, even if the pointers aren't in the same direction. Now let's see the flexibility of fib spirals as we change the orientation of the spirals, but still use the same price ranges. Usually most emphasis is placed on the vertical orientations. So let's see what happens if we also make the change of pointing the two horizontal spirals in the same direction, but at different price levels. The end result is similar coverage to the right side in the short to medium term as price, and the spirals continue down to the same approximate areas. Right here is a very strong uptrend where instead of having the gap upfilled, price continues to climb. Given these swing points, there are a lot of flexible options no matter what happens next. In these kinds of situations, whether it's a breakout higher or a major reversal down, movements are likely to be large and relatively quick. We choose the lowest point here and the highest point here since they're lower and upper thresholds where price is likely to accelerate significantly if they're passed. Pointing this spiral down ensures there can be wider coverage arcing to the right. Then for a balance of shorter-term context, point upwards towards the more recent high point, which also allows the spiral to closely approximate the current neutral to bearish context. Then, with first contact on the spiral, something important could happen soon. Again, we narrow down the price and time range of a significant area, but we still have to look at other factors such as basic price action as to what can develop. It could be a reversal back down, but we would have to wait for further confirmation of price decisively closing lower. So it could be useful to complete the rectangle with those horizontally oriented spirals. If a downward reversal does take place in the near future, the price areas near these intersections within the rectangle can become relevant and serve as supplementary confirmation for fib retracement levels. Though after some time, a bearish reversal doesn't take place and this information can't be put to use. However, with that first spiral arcing down to meet climbing price, this entire setup isn't completely irrelevant. The mid-18 range at the end of September still identified an important area. In this case, it was where the breakout really began to gain traction. Remember, we generally want that coverage to the right side. Specifically for the downward context into early October, this is over. But there's still extension covering to the right side and going up, which produces a similar situation where now the uptrend can begin to face some opposition. At this approximate area where price is contacting the spiral, pay close attention to the short-term developments. Significant events can happen soon, but it's not guaranteed to be a bearish reversal. And here it is, the spiral identified the approximate area in price and time where this major event happened. In this case, a bullish continuation. And normally, the spirals that face horizontal directions extend quite far, so they don't usually become relevant. Unless it's an extraordinary case like this where price does match the sharp incline to make contact in a timely manner. Watch short-term development especially closely here since volatility is particularly high. Similar to previous times, there is the normal behavior of an uptrend meeting of fib spiral to go into more neutral to bearish movement. But unlike previous contacts with the other spirals, there have been some sharper drops, not like the mostly flat movement in between bullish continuations. This is quickly progressing into a moderate downswing, and contact is still maintained with a fib spiral. Except now, the role has been reversed due to being in a current downswing, which is now encountering opposition on the spiral to make a shift back towards more neutral to even bullish movement more natural. Like with other analysis tools, going further into the future in a longer time frame can naturally lead to less relevant and accurate projections. That's why most attention and the best results usually reside with the vertically positioned spirals, which are often medium to small sized. Speaking of smaller spirals, using smaller spirals based on the candles from these reversal areas produces expectedly short coverage to the right side. In fact, the one on the left doesn't even go far enough to be useful. Though if you still want to base a fib spiral on a single candle based on its highs and lows, one option is to flip the orientation to produce spirals with more coverage to the right side. However, this may not always work as demonstrated here. Even before the breakout gradually began towards early October, it could be seen the ends of these spirals didn't even extend far to the right. So in such cases, using a single candle will not be sufficient, and you'd have to use a larger range from the start to end point, which not only have longer-term coverage towards the right side, but approximate the trend by going up and to the right side. Going back to a rectangle composed of fib spiral pointers, except with a different orientation where there's no major intersection of spirals within the rectangle, we can see intersections of spirals taking place outside of the rectangle. Moving towards the right side can still identify approximate price ranges of interest in terms of retracement levels price could fall onto in the event there was a more substantial downward reversal. Then later on, we see another case where spirals can extend far into the future and still be decently accurate at identifying significant areas, but generally, it would be better to use newer spirals based on more recent price action, as time moves past the intersection of those first two spirals near the end of 2021. This example begins with a stable downtrend. Then recently a minor upswing has been followed by a gap up. Choosing a spiral based on that reversal candle strikes a good balance for coverage to the right and is an appropriate moderate size to capture volatile, but usually flatter movement that follows a gap up. And this short-term context captured the area where there was a breakout for a bullish continuation, rather than a downward reversal, which was less likely given the sustained bullish volume and weakness in closing under the gap-up candle's low. Pointing the spiral down wouldn't have been much help since it only covered the area under the gap, but if you wanted to use a spiral pointing down, you could extend the endpoint straight up to the height of the previous swing high. This produced similar proportions in terms of coverage to the right side and slightly above the gap-up candle. Interestingly, due to the extraordinarily steep uptrend, the outer portions of the spiral were able to contact the approximate peak, which can be possible but is less common. Changing back to a spiral pointing upwards can produce another variation, where pointing to the left and up towards the same previous swing high referenced earlier can produce a situation where the spiral arcs wider and to the right. This would have been a readily available option shortly after the gap up highlighted the potential of stronger bullish movement. The bearish reversal area referenced from October was quite flat. Normally, it's best to choose the highest high. Choosing some of the lower bumps in the area could still produce decent results, except the spiral would be smaller given the shorter distance to the endpoint. Then there's always the option of flipping this spiral to face down and right, so you can use the same approximate reversal area but get more coverage to the right side and facing up. It was also good to see the preferable feature of the spiral intersecting with the area where the previous downward reversal began. The reason why the highest price in the flatter bearish reversal area wasn't initially chosen was because it produced a shallower angle. It also extended the spiral size and made a wider arc, and that could raise concerns of going too far into the future and losing reliability with too much coverage to the right side and up. So as usual, generally avoid shallower angles going more horizontal, along with longer distances between the end and start point. even if the angle isn't so shallow. Sometimes two of the same swing points, in this case two upswing points, can also be used when deciding how to orient a fib spiral. It creates a sort of trend line. Except in this context, these choices aren't so good since they are at shallower angles. When there's some congestion with lower activity in between a continuation, and there are no sharp swing points of even a small size, it could be possible to use some of the highest and lowest candle prices as though they were swing points. But this is generally avoided since they aren't clear and can't really be considered important features on the chart, when compared to clear, sharp swing points. It produces a relatively large area for coverage to the right side, with a relatively small price and time range that are referenced for the start and end point. Also, not only the size, but the spiral often arcs more than 90 degrees from the pointer until price is contacted, if it is even contacted at all. Since a gap candle, in this case the gap up candle, is a significant feature on the chart, it can also be used to position a spiral from its low-end high. And here the reason why we didn't point the spiral down, except in the very short-term context, was because it arcs out too wide and doesn't even cover to the right side. Even if we choose the option of pointing down to the left, using points that aren't clear swing points in the bullish continuation, results will vary. So they should generally be avoided, just like basing fib spirals on candles that aren't the focus on any significant feature, such as this random candle in the middle of the bullish continuation. Also avoid positioning a spiral based just on a large candle that's not part of any major or clear feature, such as a reversal point or a gap-up candle. Yes, such candles might be impactful in the short term, but they're usually not important in the broader context. So start and end points shouldn't be placed on their lows and highs as though they were proper swing points. Also, they usually produce less reliable and useful results. Furthermore, avoid situations like this where there is one proper swing point and one improper swing point. That candle where the endpoint extends to can't be considered a proper swing point since it doesn't lead to a lasting reversal of the downtrend which later proceeds to go lower. So flipping the spiral won't help much. Same thing down here, not a proper swing point, so don't use it. The place where the starting point is based on this new spiral appears to be similar to the past few situations, except it actually is a proper swing point because there are clear consecutive closes going lower before and then higher after it. In effect, one of the smallest scale swing points and trends possible, comprising of around 3 to 6 candles per phase. The poor results here aren't due to the swing points chosen, but rather the direction the spiral is pointing. Pointing down and to the left gets better coverage for the context of the shift to a gradual downtrend. It's also possible to extend the endpoint to the minor downswing, which produces a similar spiral and results. Flipping the spiral is also useful for covering more area in the broader context, where the established uptrend is in a prolonged retracement. However, it's more suitable to use the more recent and relevant area of this upswing. As soon as the shallow downtrend begins to reverse, there are no clear swing points in the developing uptrend yet. But that's okay, we can use the last swing points from the downtrend. Though since the uptrend isn't exceedingly strong, getting wide coverage of the spiral to the top right corner is not suitable. Instead, it's better to flip the spiral down and to the right, resulting in a more moderately sized spiral that's more appropriate for this stable uptrend. And soon enough, there's close contact with a spiral as the trend begins to weaken. The trend almost forms a direct 90-degree angle with the pointer, which is a less common but strong sign of how reliable the spiral orientation is. Speaking of angles, we now have a better situation to display how using two of the same types of reversal points, in this case 2 upswing points, can produce a highly valid trend line with a pointer, resulting in a fairly useful fib spiral, which identifies this area of interest where the bullish continuation was likely to encounter some opposition. A trend line that produces a fib spiral with an appropriate size for the given context can make up for some other shortcomings, such as using these less ideal minor swing points, especially the one the end point is on now. It's also possible to use some of the minor downswings since they produce similar spirals. And although going back here puts the end point on a more important reversal high, it produces a spiral that's too large and begins to lose effectiveness over time. Using the candle at the peak here provides good coverage for this downtrend here, both in terms of size and the curvature of the spiral. But when we extend down to the swing point here, we get a similar problem with lost accuracy when the spiral becomes too large. A slight remedy to shrink the spiral is to flip it, though it's still not as good as going back to a situation like this, whereas swing points are sharper, quicker, and more pronounced. As we've seen before, sharp and quick reversals are a preferred characteristic when deciding how a fib spiral could be positioned. However, if there's more range-bound movement after the fib spiral has been applied, it will usually have shorter lasting relevance, because with more range-bound movement, it's more likely medium to small-size spirals will be used. And even if they are relatively larger, it's likely at least several options for placing spirals will result in relatively quick contact with a spiral closer to its center. This is just something to keep in mind in such environments where clear reversals frequently take place in the medium to short term. But over an extended period of time, price could remain relatively unchanged. When the market enters these kinds of periods, keep this in mind even when applying larger and multiple fib spirals. Then naturally, as more decisive and directional movements make lasting impacts on the chart, many more options open up for the placement of spirals. In this case, we place 2 small spirals at the beginning of a downtrend. So as the price drop begins to weaken into October, these spirals will arc back down to meet the short-term bullish to neutral context, which in this case captures some of the most vertical and stable portions of a major bullish continuation. With so many options available in these kinds of market conditions, we can observe another variation with spirals placed around the downward reversal area that end up intersecting with areas of interest that contain bullish, bearish, and neutral context. By mid-October, it was clear the downtrend was at least pausing since the chart stopped making regular consecutive closes lower. So a bullish perspective could use this more recent context to apply more appropriate spirals for the potentially significant shift in market sentiment. As would be expected, basing the spirals on these first few swing points led to effective short-term coverage, primarily the breakout from the bullish reversal range, after which the spirals became less effective as the climb began to weaken nearing November. As a usual alternative, we can use the same or similar swing points in the area and flip the spiral orientations, which results in slightly wider coverage up and to the right side, which is quite ideal to pick up where the previous spirals left off. Now let's try using the final downswing from the downtrend for more distance between the start and end point for a larger spiral. Then let's point in the same general direction with the next downswing that takes place in the developing uptrend. It does a good job at capturing the mid-400 price range where the last downtrend began and would be a natural area of resistance. Though due to the way the spirals are pointing, they're too wide for effective coverage to the right side. As soon as the green surge began, it was clear price was generally moving towards the direction of the top right corner in a relatively short time. When referencing those reversals from early October just before the breakout began, it was preferable to have spirals oriented so that there was short to medium term coverage up and to the right side. In a situation like this where there are 2 downswing points at nearly the same price range, it can sometimes be useful to make a V-shape from these downswing points down to a moderate or minor upswing point that's often in between them to produce a short-term curve that closely approximates the neutral to bearish developments. Relatively good results here in identifying the approximate price and time ranges where interest was focused on the development of the bearish reversal range, completing and drastically accelerating price lower. Though you can't expect it to be perfectly exact to capture intersections between the spirals and price during the largest drops at the beginning of 2023, especially since December had a prolonged phase of narrow horizontal movement. Within this most recent downswing and upswing, distinct swing points are lacking. So the next best thing is to reference the high and low candle prices from continuation candle formations, which can be considered the closest thing to proper swing points, and are some of the most impactful features during these trends, especially with distinctly bullish and bearish candles, along with candles with larger bodies and or high volume accompanying them. Here's another situation where a trend is taking off rapidly. So it's preferable to orient spirals for closer coverage towards the top right corner for this steep uptrend. But the lack of clear swing points after the initial upswing does make it somewhat difficult. There's a simple solution to this, and that's to not use swing points within the trends altogether, because they don't really exist in this case. Instead, use the clear reversal points and single candles, or also places spiral in a vertical orientation. Except extend the distance from the start and end point to capture the absolute highs of these last reversal areas, or simply the general height of the past downtrend. In addition to clear and quick swing points, this fib spiral benefits from the preferred characteristic of intersecting with past reversal areas, whereas this one does not. It also has the disadvantage of flatter movement during and after a minor bullish reversal. In contrast, placing a fib spiral at this next upswing point produces a better result. There's still some minor congestion after the upswing, but fib spirals placed around this clearer reference point do a good job in coverage towards the area that is now becoming a sharp peak for a minor upward retracement within the larger downtrend. It also shows another case where there is the preferred characteristic of a spiral intersecting with a clear past reversal area. As a strong bearish continuation gets underway, attention can be focused around reorienting a fib spiral on this upswing point to get a short-term arc to go down and to the right side. But the portions of these spirals that are closer to their centers show intersections with price. We want them to extend a bit further than where price is currently at, and the outer portions of these spirals are quite wide, so they won't be useful in the short term and will likely be less reliable in the long term. Since the large drop is short-term context and we want coverage to the bottom right corner, it'll be helpful to reference the most recent context. In this case, we're referring to the final portions of the minor uptrend we've just been looking at. Incidentally, pointing these fib spirals in the same direction as these last swing points in the upward retracement means pointing the first one down and to the right, and the second one up and to the right to produce a V shape that was formed by the final downswing and upswing. Then, as usual, even though they're pointing in nearly opposite directions, the spirals follow a similar rotation, which is exactly what we were looking for. The spirals arcing down and to the right quickly meet falling price. The area of interest here is mid-November from the $10 to $15 range, which does oppose even this strong drop. Again, it's not a guarantee of support for a rebound. Had there been more bullish movement into December, basing spirals on this minor upswing point, along with some less than ideal bearish reversal areas, provided some options to capture minor rises in price. But overall, most of these spirals and their orientations were not suitable since they were either too small or too big, along with the unpreferred characteristic of the prolonged neutral movement that was followed by a decisive bearish continuation. As price goes lower and shows some minor signs of slowing down in the short term, it would again be useful to have a spiral getting coverage to the bottom right corner in the short term within this mostly flat bearish reversal area. This point isn't the absolute high, but it's quite close and it's more recent movement. Using this bearish candle before the main drop can reveal some valid spirals that capture this area of interest for the downtrend. And as seen in other examples, the main interest for a downtrend is opposition to it. And unlike last time, there's neutral movement for only a short time before there's that decisive bullish reversal. So when price has an intersection with the spiral, we just know that's an approximate price and time range, where the downtrend is more likely to pause or reverse. We don't know which one it will be by using the spiral alone. With a bullish continuation underway and no distinct swing points in the current uptrend or the past downtrend, we can place the spiral on the entire downtrend itself, which produces a fairly large spiral that could be acceptable from a bullish perspective, seeing as how there's currently a strong bullish advantage. And interestingly, here's the less common characteristic of a 90-degree angle formed with the pointer and uptrend when going directly from the start point to where price intersects with a spiral. Just something interesting to note, usually it won't be helpful because it's only apparent once price intersects with the spiral. Then there's that familiar alternative to just use the reversal candle. Extending up to the height of the previous downtrend isn't so helpful once the second bullish continuation continues, because there's no steeper short to medium term coverage up in the direction to the right corner. If we just use points from the uptrend, the absence of any clear swing points after the initial reversal leaves us with the highest and lowest candle prices in the middle of the first bullish continuation. Not an ideal setup with less than ideal results. Then it's a similar setup and results with the second half of the bullish continuation. It's another example where, in the absence of any clear swing points within this trend, a viable alternative is to use single candles. Specifically, some of the most important candles after that initial reversal candle that marked the start of this current trend. The first two of these kinds of candles are the ones just before and after the standard pause found in the middle of a continuation. We end up with some decent results with adequate coverage in the short to medium term towards the top right corner. Flipping these spirals to point down is only useful in the very short term, towards the second bullish continuation, due to the much smaller area that provides coverage towards the top right corner. Another option is to use the points that define the first phase of the uptrend. In this case, from the initial reversal candle low, then up to the highest price in the first part of the bullish continuation, and then down to the lowest price of that pause in the bullish continuation. Again, this isn't preferred, but in this case, we get spirals that get good medium to short-term coverage towards the top right corner, which is suitable for this kind of situation where price is rising rapidly. Part of this is due to the good proportions formed by the two spirals that results in a near 90-degree angle formed with the two pointers. In addition, there's the steep trajectory of the uptrend, which points in the general direction of the expected move towards the top right corner, and is virtually in alignment with the first pointer. With overall neutral to bullish movement developing a more gradual uptrend, A larger fib spiral with a wider arc towards the right side turns out to be a suitable choice with a less common positioning, where the start and end point are based on the entire length of a trend, and points diagonally due to being placed on the highs and lows of these reversal points. Using the lowest candle down here produces similar results with more medium to short-term context. These are common and more realistic results where we won't get the exact peak. Intersecting with the spiral, intersecting with approximate areas of congestion, is much more common for most of these spiral variations based around this first upward reversal that began the larger uptrend. Pointing down on the first portion of the uptrend produces a highly valid spiral, which achieves the same desired wide arc. And as a bonus, it intersects with several past clear reversal points and follows the approximate curvature of the previous downtrend. Such features are much less common, but when they do occur, you could get improved results. Due to the abundance of clear swing points and more decisive price movement, there are plenty of options which can produce similar results. When using the first downswing in this uptrend, there's this flatter reversal area which began the downswing. Using one of the last or first highs makes less of a difference since it's a small area. Then with a previous and sharper downswing using the entire length of this bearish reversal, it's a fairly long distance between the start and end point. But in terms of the time range, it's a short duration and the spiral won't be exceedingly large, similar to other spirals before it captures that approximate area where price begins to slow down just before the sharp peak. The final portion of this downtrend just barely qualifies as a proper swing point. At first, this orientation produces a spiral that's much too wide. Instead, we can flip it around for more preferred medium to short-term coverage. With an early downtrend in progress, we can easily reference the peak candle to produce a spiral suitable for the neutral to bearish context. We get that preferred characteristic where it arcs over to the left to intersect with some noteworthy features, which in this case is that downtrend we looked at previously. As time moves along and price drops, the natural curvature of this spiral orientation is likely to arc over towards the bottom right corner and eventually intersect with price at an area of interest. Since this is the context of a downtrend, the area of interest is likely to produce opposition to the downtrend, meaning neutral to bullish movement. Flipping the spiral to point up produces shorter-term coverage that goes less towards the bottom right corner. Though it's still valid and captures one of those shorter-term swing points, and incredibly, even after almost a year, the spiral's outer portions manage to capture an area of interest where the long-term downtrend begins to shift towards more pronounced bullish movement. Similar to the previous downswing we looked at near the beginning of 2022, we can use this first downswing that began the larger downtrend to produce a long-term spiral to try and find areas of interest where there could be major opposition to this developing downtrend. It does, in fact, arc down for contact with that approximate area where there was a shift towards more neutral to bullish movement. Naturally, it's quite a wide area given the large downtrend and the broader reversal range. Using the area in between two spirals can help narrow down the search due to the suitable conditions of fast, clear swing points. The decisive long-term downtrend variations of fib spirals at the top of the downtrend achieve similar results in arcing down to the bottom right corner, where this current bullish reversal range is forming. Focusing on the lowest upswing point, a bullish perspective would aim to have these spirals arc up to the top right corner, which allows for this less common variation with pointers, crossing and converging to form that familiar V shape with the lowest upswing point as price moves up and the arcs begin to move down. There's eventual contact with the first smaller spiral, and it's good to see those secondary characteristics where on the left side these spirals intersect with clear past reversal areas. Right when there's contact with the spiral, there is opposition to the current uptrend, meaning the area of interest is defined as a neutral to bearish area that extends until the area of approximate contact with the next spiral. The reason why this orientation was not chosen was because it produced proportions and placements for these spirals that were too small and close to the center to extend out and be useful towards 2023 when the uptrend continued higher. And the outer portions were much too wide to realistically be contacted anytime soon to be relevant with the uptrend, which wasn't particularly steep unlike some other examples we saw previously. Familiar positioning like this produces better results, but there's still an issue with the first spiral being too large due to it pointing towards the top right corner and running the length of a slightly longer upswing. The same thing happens with a second spiral when we change the position to a similarly sized upswing, resulting in an arc that goes in the desired direction of the top right corner, but is much too wide for use with a slower and more medium-term uptrend. This trend provides a good opportunity to show how forming a trend line with a pointer can be done with more than one fib spiral, especially when the trend is so stable the two pointers can be aligned with each other. The great results are helped by close adherence to the trend line when a larger retracement bounces off it. Pointing a spiral up and based on the lowest reversal candle produces a spiral close to the same size as a spiral with a much longer length between the start and end point that extends up to the final downswing of the previous downtrend. This means it's fairly short-term coverage that is in the desired direction of the top right corner. And at that area of interest between the two spirals, there's certainly neutral to bearish movement in this shorter time frame to oppose the uptrend. But ultimately, in the broader context, it's just a delay in the ongoing uptrend. And again, there are similar results when extending the second spiral up to the approximate height of the previous downswing. Then right when November begins, there's contact with a larger spiral. Except this area of interest is defined by the start of a bullish continuation, which is less common, but we've seen it before. We know there can be an important event for the uptrend at that approximate time with an intersection between price and the spiral. This combination is less common in combining the diagonal length of a minor reversal that shares the low price of a single candle, which is the basis for a vertically positioned fib spiral. And a slight alteration is to extend up to the height of the previous downtrend. The end result is desired medium-term coverage towards the top right corner that's suitable for this moderately paced medium-term uptrend. When we look back, we can see those secondary characteristics where clear past reversal areas are contacted by the spirals. The end result narrows down an area of interest for the uptrend, quite similar to some of the other more successful spiral variations. Here, the second half of this larger bullish reversal range naturally has some of the steeper earlier stages follow the approximate upward curvature on a vertically oriented spiral based on the previous downtrend. Now attention is focusing on the likely end of a downward retracement and directed towards advancing up to new highs for this developing uptrend. Initially, using a spiral orientation to get some of the smallest coverage promptly alerts us to when a first minor obstacle could be encountered in the journey back up to previous highs centering around 69. As the advance backup resumes, we want the spiral to get more coverage, but not too far in time or too wide of a price range, since price was on a course to reach 69 in the near future. And with this success in swiftly crossing over 69, adjustments are once again made to keep up with advancing price. Since it's a bullish continuation, we use this area around the downward retracement as a first choice when deciding how to position spirals to get coverage of upward price movement in the near future. Realistically, you shouldn't expect guaranteed resistance leading to downward reversals upon contact with the spiral. Even if this wasn't a sustainable bullish trend with periodic appearances of large-bodied green candles with higher volume, instead spirals helped confirm and narrow down approximate areas in price and time when the uptrend could encounter obstacles and slow down, resulting in a minor to moderate downward retracement or situations of breakouts with rows of green candles and or increased volume, which isn't as abundant in this last case, leading to a smaller and less stable breakout to newer highs. This example begins with a fairly deep retracement. Then we can base a fib time zone on the same range as the initial uptrend. Now that there's a move higher, the fib retracement can be expanded and be combined with a relatively smaller retracement to find overlapping ranges where there's often more potential for reversals to happen. Specifically closer to the fib time zone lines, spirals in this case are used for supplementary confirmation of this particular range where the uptrend continuation begins to significantly slow down. It will be based on this upswing point, since that's where the retracement rebounded to begin the bullish continuation. Overall, these intersections with the spiral mark the beginning of this more bearish phase that's close to the actual reversal point, and the intersection with the fib time zone and retracement levels. As the downtrend develops, lower attention naturally focuses towards the gap fill range, which also happens to have close overlap with levels from the larger and smaller fib retracements. So it's no surprise it continues to be an important reference area in the following weeks, especially in relation to the upcoming fib time zone lines where key continuations and reversals take place. When a trend is made up of clear candle patterns like this, using a fib spiral is often fairly easy right on a sharp reversal candle, such as here where the two spiral variations cover various portions of the trend slowing down. This isn't completely a full or clear swing point, nor is it a significant area in the grand scheme of things. So most spiral variations on this area won't be very useful. Now, after the resumption back to a major downtrend, there's a similar situation but with abnormally large candle proportions. Though, nonetheless, it turns out to be a clear reversal area, So the process is again pretty straightforward, and naturally these larger spiral variations don't get good coverage in the short to medium term where it's needed. Because after all, it's an uptrend, so we want coverage towards the top right corner in the short to medium term as the initially slow bullish reversal begins to accelerate fairly quickly. With more progress in reversing the losses of this large downtrend, referencing these structures from the start of the drop can help identify potentially more important parts of this large fib retracement. The main bullish engulfing reversal pattern provides good reference points for these first fib spirals, and the upswing from the most recent rebound in this ongoing uptrend would prefer this spiral variation, which gets more coverage to the upper right corner, along with this variation which extends back up to the beginning of the bearish retracement. The end result is these spirals running through this approximate horizontal range we defined earlier, and it quite accurately marks where and when the uptrend significantly slows, which just means, like in this case, the steeper incline begins to flatten noticeably, and it doesn't necessarily point to an imminent reversal back down. This example demonstrates the fib spiral in its more common role as a supplementary layer after other fib techniques have been applied. The main focus here is a very clear bullish reversal range with clear pauses before and after it. So with the uptrend now rapidly progressing, this area centering on 8750 can easily be referenced. Then apply a moderately sized fib retracement to capture all these features around its levels. Using this more recent drop is too small of a trend for a trend-based fib time zone. To get more coverage, extend the trend back to where the fib retracement begins, where attention will naturally focus up towards this intersection. Now repeat the process, except the trend-based fib time zone is based on this shorter interval. Then we look for approximate areas of overlap with the last trend-based fib time zone variation. Then for shorter-term context, we can also use the regular fib time zone at areas where the trend-based fib time zone fell short. We can try another variation of the fib time zone and see there have already been intersections at areas where the trend had slowed down. Now, as price resumes higher, we head towards the area of most overlap. As a supplementary layer, we can try running spirals through these areas of overlap that will be positioned on key features relating to the bullish reversal range, such as candles at upswing points near the beginning and end of the range, as well as the lowest point of the range. Spirals centered around this area of the pause we marked earlier are also a good option, as they're part of an important continuation in the uptrend. These areas indeed turn out to be important. As expected, the uptrend does pause and fall slightly, but since there's no major downtrend and the chart resumes higher at this current intersection area, a minor breakout past this resistance range becomes much more likely in the short term. Wow, over a dozen examples, hopefully now you have a better idea of how to use the Fibonacci spiral. For more on Fibonacci methods, as well as indicators, follow Ascencore. Thanks for watching and have a nice day.